Good evening, everybody. It's Wednesday, 5:40 p.m., September 16th. My name is Amal. I'm going to do your evening Bitcoin and market update. So first things first, I want to show y'all again what our community is doing on the Advantage side. So as you guys can see, September so far has been a decent month, relatively calm. We haven't done a whole lot of trades. We've kind of been persistently holding through some of our positions in the altcoin area. We started hedging on some Bitcoin short positions and then taking some profit on our other altcoin positions that were already in profit, okay? But for the most part, you know, the last couple months, we've been relatively steady and taking profit, following our disciplines of understanding how the market can ebb and flow up and down. And with that, you can't just constantly be bullish. As the last several weeks have shown you with a 20 to 30% drawdown in Bitcoin and almost 50, 60% drawdown in altcoins, you have seen the importance of taking profits, moving up stops, and many other things that are inherent parts of the discipline of trading. And so you can see our community will illustrate to you that we are people in this space that like to trade in and out of the market, take profit whenever we can, and make sure that these profits are realized and they're not just numbers on your trading screen, okay? So these are all realized profits that real people are seeing, and I'm really happy and glad that people are seeing the benefits and advantages of our community. So if you guys are interested in signing up for our community, go to the Alpha Trades products page right here, buy the Advantage membership. There's also a Shepherd indicator, which I'm gonna illustrate to you in a little bit, right over here. And y'all can see exactly how it operates, okay? So let's get to business. Let's start talking about what exactly is going on in Bitcoin, right? First things first, let me just close out this door because you can hear all the traffic here in Colombia, because it's basically you know, high traffic time right now, people leaving from work. So let me close out the windows. Alrighty, okay, so what we have right now, guys, is, you know, what seemed to me like a rising wedge, and we actually broke up from it and collapsed back inside the wedge. Now, typically, when you break up from it like this and then you collapse back down inside, this is not really a good sign. But the fact that Bitcoin is still grinding along this trend line right here still makes me feel positive that there's still some upside movement left. And this is something that I have been prepared for, and I've been talking to my community about it. So if you look in Bitcoin analysis right here, okay, I talked about when price was at 10,900 or so, after it retreated all the way back from 11,040. I talked about how, you know, I don't see any trapped buyers and I don't see any passive strong sellers. And again, this is how I look at the market from the footprint, from the L2 data standpoint, okay? This is something that I look at quite a bit on a day-to-day basis because I like to see the market behind the curtain, you know, behind what exactly is happening in the price action. And the way you sort of start doing that is you start to recognize that, you know, there are inherent footprints that big players leave behind, okay, when there's market buying, market selling. You know, even if we turn on the heat map right here, you know, you can see on the heat map exactly where the big buyers, big bidders or you know, asks are, and this helps you determine exactly where people might be lined up to sell, lined up to buy. Okay, so these are important tools that I have in my personal arsenal that I like to utilize and share with my community on a day-to-day basis. Okay, so personally, where I think we are is, you know, a peculiar spot where I personally think we can still keep going up, and this is really the next big order block right here, as you can see, before we rolled down all the way from the 11,500 high all the way down to about $9,800 and some change. And if we throw a fib on that, right? Some unique things come out, okay? So let's check that out. So from this key high to this, let's just say this low right here, you'll see that right in that block right there, this order block right here, we have the 618 fib, right basically around $11,200 and some change. So I'm kind of looking at this particular area as possibly the next big resistance. And if we look at that 11.2 area, guess what else is there? Okay, I've marked this out for several days now, something that I've been watching very closely if you've been watching my videos, and it's this, right? The 50 moving average, which is the red marker right here, is coming up to that area. And again, previously in my videos, I've discussed that every time over the last year, year and a half, Bitcoin has dropped through the 50 moving average, found support right near the 128. Let's make this one the 128 moving average. Okay, so every time Bitcoin has kind of come through the 50 moving average, found support on the 128, if it starts getting rejected on the 50 right there, chances are it's going to start dropping lower. Okay, it's done that right there, and it's done that right here in the 2019 high as well. You can see again, Bitcoin moved sideways for a little while, dropped to the 50 moving average, retested that 50 right there, again went back to the 128, again went back to the 50, and then finally sold off. This is a very common trait that I've noticed about Bitcoin. Now, as someone who's come from the traditional market world, there are key rules and key moving averages, or rather even key fibs that certain assets like to maintain, like to find support on, like to find resistance at. And Bitcoin to me looks like one of those assets that wants to come back to the 50 moving average. And if it starts seeing resistance right there, it's very possible that we might start rolling over to the downside. In which case, my case is pretty clear if we start seeing rejection. I have some remaining long positions in the altcoin area that I will start trimming, and more than likely I will start hedging a heavier short on Bitcoin, and I'm going to start targeting these levels right here. Okay, $94.50, $9,100, and $8,800. Okay, as per our indicator, again, the indicator is available on our website. If you go to thealphatrades.com, products page, and the Shepherd indicator, the indicator is actually kind of telling us a similar story. Okay, again, this is a moving average based indicator. We can see the ribbon that is coming to meet price right now. It's also telling us that we broke through key moving averages, and now we're coming to test those moving averages from the bottom side up, meaning we're testing it as resistance. And so if this is the case, we test it as resistance and we start breaking down, well, then I'm looking for these markers down here. Okay, now let's go a little bit beyond that, right? We have another thing happening in Bitcoin, which is, again, we have some decent upside movement, and we've now pretty much come into the overbought territory. As you can see, right, for the last several days, as Bitcoin price action has moved up like this, first of all, there's been some divergence as per OBV, as you can clearly see, right? We've seen lower highs being created, and this movement right here does not really indicate to me that there's a whole lot of money flows behind this move right here. OBV is clearly showing you that it's on a lower high or a bit of a downtrend, if you will. So these are things that should make you cautious and suspect of this quote unquote rally. Because I'm definitely thinking that this rally or this movement right here, whatever we're seeing, I think it might start exhausting itself somewhere around this 11,000 area, maybe 11,200 to 11,300. So that $200 to $300 pocket is where you need to start preparing and thinking about, well, what could Bitcoin start doing from there on? If it starts breaking out, right, say it gets above 11.5, 11.7 or something, okay, then we buy back a little bit higher, buy back on the confidence that there's volume coming in, we're breaking through key resistance levels, and that's okay. But the way I'm preparing for it is it's very simple. I'm looking at this area as key resistance. More than likely, I'm going to start looking at the market very closely if we start rejecting this area and start closing out my altcoin positions. Because here's the thing, no matter what Bitcoin has done over the last several days, altcoins like Ethereum still consistently creating lower highs. Even higher risk assets like Link right here, again, had a sideways consolidation. You could call this, mini distribution or double distribution, and then started to sell off. What this is indicating to me is that the money flows are really not flowing into risk assets like Link, like Ethereum, and like most altcoins. And more often than not, what that has told me is when Bitcoin is really sucking in the money flows and it's now starting to show divergences, which are bearish divergences, if you will, or hidden bearish divergences, and then volume divergences, it's telling me that the price action is starting to show weakness. It's starting to show deterioration. And at the very least, you need to be cautious. Doesn't need to, you don't have to just start shorting heavy and just sell everything and go short on everything. It just means that maybe just tame down your bullishness. Just be careful. The other way I started to look at the market was I put up this, was it 2 days ago or so, and I told my members and even on Twitter that there's a big bearish divergence popping up in the S&P 500 on a weekly time frame. Today, we just had this big Fed meeting, and again, I had some very cheeky remarks regarding the translation of Jay Powell and the FOMC meetings, and you can go on our Twitter feed and check these out. But basically, the Fed is still dovish, meaning they're still going to maintain their accommodative policies to support the market, to support buybacks. And so I don't really see any change from the Fed. And so that, in its sense, doesn't make me outright bearish. What makes me bearish, or rather cautiously bullish, is that there are some signs of weakness being seen in the market that most are wanting to ignore. First things first, of course, this channel right here, you could see the channel right here is actually cracking. Even today's daily candle after the Fed meeting, which was relatively positive, still printed a pretty bearish candle, as you can see. Now, on top of that, like I stated earlier, we have this massive bearish divergence building, okay? We had one back here in 2018, and we're now having one right here 2 years later. I'm thinking that there might be a little bit more downside left to this, okay? By the end of the week, or rather even next week, as the September monthly comes to a close, I'm still thinking from the high to somewhere, where the S&P 500 bottoms, it might be down 15% or 10% from its key high. And so if that's the case, let's just say, we're down 12% and some change. Well, then what does that mean for Bitcoin? Well, Bitcoin's already at 11,000. It already touched 10,000. More than likely, again, this is just a possibility, right? More than likely, if the S&P 500 puts in a lower low and goes down 12% from its key high, well, then I expect Bitcoin to go lower towards my targets, which I've spoken about right here. I think it's very simple. I think the play is very simple. I think the market is already showing you that there's signs of deterioration that are already being seen, but I don't think most are prepared for it because we've been trained psychologically to buy the dip. We've been trained psychologically that the market keeps going up. And so no one is really used to, say, a 15, 20% drawdown for a couple of weeks. And even though I don't think that the drawdown means the bull market is over, or this rally is over, I do think that it's going to catch a lot of people by surprise at how low the markets can go because they've gone up so much. The volatility will ensue on the downside in the same manner. Now, again, that doesn't mean that the rally's over, I'm just implying that there might be an up movement, a retrace, and then, over the next couple of weeks or next couple of months, we might start moving up and out. But at present moment, I do think that we are a little bit overextended. I do think that if Bitcoin, obviously starts showing me signs of breakout above 50 moving average and starts breaking past 11.7, 11.8, then that means we get to buy on confidence. That means we get to buy on another big rally that might be coming up. Because one thing I'm fairly confident about is if we start getting rejected at the 50 moving average, I would probably say we're going to take out these lows. If we start breaking above the 50 moving average and breaking past 11.5, 11.7, then we should at least start targeting 12,000, 12.5, which is this previous high right here, and possibly even 14,000, which is a key marker that comes back from way the heck back here in June 2019, as you can see. Okay, I don't really see it any other way. I think the options are pretty simple and pretty clear. And rarely does the market give you clear opportunities like this. Okay, usually it's pretty muddled. All right, but right now the market is kind of showing you that, hey, I'm coming back into resistance. Whatever happens from here, either we get a breakout, and that means it's a clear breakout to the upside, then, hey, we should be going to 12,000, 12.5, 14,000, possibly even higher. But if we start getting rejected and start breaking down, time to start cutting down your long exposure, time to start hedging short heavier on BTC, and we should be aiming for 9,000 or 8,000 in those targets. Okay. Now the DXY, again, many things are being dictated in Bitcoin and crypto by the macro markets or the traditional markets like the DXY, which is a dollar basket. And so far, I mean, all it really did today was just chop around this area. There's a lot of up and down movement over the last several hours, but point is, the DXY actually broke above a key resistance level, which was this pivot right here. And it broke through it pretty convincingly to the upside. Now it's hanging on, and getting rejected by the R1 right here, just based on pure technicals. But if it stays above the pivot and starts getting back towards the R1, I'm expecting, a more of an upside movement. Okay. So these are the things that we want to be paying attention to very carefully. What is the dollar going to do? What are U.S. equities going to do, like the S&P 500 futures? So far, they're kind of signaling to me that there's a big base being formed. But does that mean that from this base we start pushing back up, or do we start breaking back down? I don't know. I think today's daily wasn't really that great, and again, we're kind of hovering at the bottom a little bit too much, but really no signs of taking out the previous lows. Okay, so we'll see how the rest of the week goes. On the trading light front, the other part that I want to mention to y'all is the other form of divergence that I like to pay attention to. So as you can see, right, there's, again, clear higher highs in price right there. And again, over here, what we have is definitely lower highs in CVD. CVD is the cumulative volume delta, which indicates to us of how much market buying, how much big participation is happening in the market, where bigger players are buying in terms of market or aggressive buying to the upside. And as you can see, it's not really a lot. In fact, it's actually a lower high right here, meaning there's a divergence. Price is making higher highs, but the CVD is not giving you those signals that it should warrant these higher highs. Same thing with open interest. Open interest is a little bit different right here, right? You can see lower highs in open interest and higher highs in price. Now, open interest is a little bit different because it's possible that, longs are not stepping up to the plate in this particular area. Or maybe longs are closing out. Maybe shorts might start building their position as this thing starts moving up, as price starts breaking down. But the point is that on most fronts, the way I'm looking at Bitcoin right now is, at the very least, I think it's time to be cautious. I think it's time to go into capital protection mode. I wrote a big post to my Advantage members the other day on exactly how I am viewing the market from the basis of whether it's bullish or aggressively bearish, or exactly what I'm thinking about doing in the market. And these are the kinds of posts that I like to write for my Advantage members, because they get to see from a, let's just say, 30,000 foot view of exactly what could be happening in the market, as most people are positioned one way. The thing about trading and investing, and especially when you look at markets a little bit too closely, is it's the whole idea of being close, or rather too close to the elephant. The theory, or rather the tale, kind of goes where if you are too close to an elephant, all you really see is some creature, not really even a creature. You just see like something big, brown, and wrinkly, right? But when you start zooming back and stepping away, this is where you start to realize the bigger picture, which is there's this big, sort of beautiful animal right in front of you, and you get to see it for all its might. And I think that kind of happens in markets too, to a certain degree, where if you don't step back, all you really get caught up in is maybe 15-minute charts and 30-minute charts and hour charts, and you're not really looking at say the weekly time frame, which kind of broke through key support levels on the downside. We might be retesting resistance back up to the upside, and it's possible that we might have more downside ahead of us. It's things like this that most traders overlook, and it's often those kinds of clues that really rob traders of their money, of their patience, and of their time. So, I think I've made my case pretty clear. I would also encourage y'all to look at the Fed minutes, look at exactly how the Federal Reserve responded. We had a pretty good chat in our Advantage community, discussing everything. I mean, we pretty much do this every single day. We're a pretty active community of everyone discussing exactly what's going on in price action, what we're seeing in the market. As you can see, we're pretty active. Even in the altcoin channels, we like to discuss exactly what altcoins we're trading, exactly what people are trading, even in the DeFi space right here, as y'all can see. So yeah, pretty active community. If y'all want to join, again, alphatrades.com, thealphatrades.com, hit the products page, and then buy the Advantage membership, and come join our awesome community with over 100 traders from all over the world, different ages. It's not just young 20s or 30-year-olds. We have 50-year-olds, 60-year-olds, people who are moms and dads, people who are working in different industries but also trading on the side. All kinds of people from all across the board, and you can come in and make some friendships. Okay, so I think I've covered everything, guys. That's it. Y'all take care, and I will catch up with you soon. Cheers.